In today's video, I'm going to take another quick look at the stock market. There was no doubt yesterday that the plunge protection team intervened and tried to turn the market back around. They're trying again this evening. It remains to be seen whether or not they will succeed. As I noted, we've got an FOMC meeting next Wednesday, and the odds suggest that the Fed is not going to cut rates next Wednesday. That decision is going to be more palatable if the stock market is at least moving up, preferably at or near all-time highs. So I never really expected this correction to get too much traction, but I would have liked to have at least seen it come down to some kind of a reasonable support zone before turning. That would have been a natural correction, and a reasonable support zone would have been the 50-day moving average or this pivot right here. The market's not going to naturally bottom right here in the middle of nowhere, but we can get an intervention to stop the correction preemptively. And that's just one of the things that makes it very tough to short the stock market in our modern markets, is that you just never know when there's going to be an intervention to abort a corrective move prematurely. So we'll have to see how this plays out into the opening today, and then more importantly into the close, whether or not the selling pressure can overwhelm this intervention and stocks continue the corrective move and finish the daily cycle low and bottom at a natural support zone, likely the 50-day moving average, or like I said, this pivot. And then, as I said in my last video, I suspect, well, there is going to be a bounce in the FOMC meeting. They just don't allow stocks to correct heavily into FOMC meetings anymore, not in our modern market. So, the theory was always that we were going to this correction was going to end pretty quickly, and then we were going to rally again. So the intermediate correction was always going to be pushed out to late January or early February. And at that point, we would get a move below the 50-day moving average and turn that moving average back down. But it's pretty clear at this point that there's going to be interventions to try and stop this correction prematurely, and we'll just have to see whether or not they succeed.